So today we're going to discuss how a potential Brexit from the European Union by the UK may impact FX. This is at a very pivotal time in both in the histories of the United Kingdom and also the European Union. The UK has been part of the European Union since 1973, very early in 1973. And we are just a few days away. Next week, Wednesday or Thursday, the 23rd of June, to be precise, is when the UK public will go to vote to decide whether or not they wish to stay in the EU or leave. Now, the agenda for today is to tell you a little bit about ourselves, but mainly focus on what exactly the Brexit is, why the UK is considering it, and then in a nutshell tell you its economic impacts. But I'm also going to spend a considerable amount of time discussing the various aspects of the debate, right? Because it is so important that you as traders understand the overall impact, but also the nitty gritty, so you can get a view on whether you believe it's going to happen or not, because that will to some degree impact your trading in the short term. And for those of you that are risk averse, obviously it would just mean that you're not trading during this period at all, which makes sense. And then at the end, we will give some general guidelines on what you should do as a trader going into the Brexit vote next week, and then also a few weeks after that. And at the end, we'll have a Q&A where you'll have the opportunity to ask questions. And of course, this webinar is recorded and it will be submitted to Hot Forex, so you can view it later as well. Before I proceed, please observe the disclaimer and also the risk warning, and then we can move on. All right, let us proceed. To give you a quick introduction on ourselves, for those of you that are new to these webinars, we are Blue Sky Binary. We're an education, research, and trading group. We are a group of senior traders that research, educate, and trade both the binary option and FX markets. We also provide 24-hour trade support and analysis to allow traders to trade safer. We are presenting this webinar on behalf of Hot Forex in order to educate you, to help you become highly profitable currency traders in the long run. Let's discuss the Brexit. There are 28 nations that comprise the European Union today, and the UK, as some of you, if not all of you already know, is seeking increasingly support this year to actually pull out of the European Union project, resulting in significant macroeconomic consequences for mainly the UK, but also, of course, affected trade parties, which would include Europe, US, and other nations around the world. And, of course, proportionately, their currencies will be hit as well, right? This is a complex and drawn-out process, whether it happens or not, with many uncertainties that not even the smartest of economic think tanks and hedge funds and investors have complete certainty on. All right. Now, the latest Financial Times poll as of yesterday shows a 47% in favor of an exit or Brexit vote, right? And 44% are indicated to remain. 9% are undecided. Okay. Now, one thing to note about these polls, and there's a range of polls, and different polls might say different things, but generally speaking, right now we are around a week away from the referendum, and it looks like the UK public, based on a poll which typically consists of around 1,000 to 5,000 people, shows that there's a slight edge for those wanting to leave the project. The current Conservative Party, which is run by David Cameron, will be obviously attempting to negotiate the terms of its membership with the EU to a more favorable one, so that by next week, the day the UK public votes, which is the 23rd, public sentiment hopefully has swayed in such a manner that the status quo is maintained and the UK continues to be part of the European Union. One thing to note is that the Bank of England came out today with a warning stating that a Brexit would destabilize not only the UK economy in terms of inflation and growth, but also the global financial system. All right, and that's a very severe warning. So, in a nutshell, why exactly is it that the UK is considering a Brexit? There are four key issues. We're obviously going to go into the micro as well. There's more than just four issues, but these are the four macro issues. All right. Firstly, it's immigration. That's a big policy agenda, a big topic. Ministers wish to stop EU immigrants from receiving benefits until they have been resident for at least 4 years. They wish to limit the offtake that the UK is partially required to participate during refugee crisis, right? So every EU member state has a certain responsibility, a certain quota that they have to take on in refugee crises like we see from Syria. The second issue is competitiveness. The UK wishes to reduce the burden of excessive regulation that the European Union members face, the red tape basically, when conducting business inside the bloc. All right. Furthermore, they want to access new markets. This is a process that Brexit proponents are calling turbocharging, and they want to strike their own free trade deals with the US and other Asian economies without the European red tapeism. And we'll examine that in more detail later. From an economic governance standpoint, the UK wishes to obtain confirmation that the euro is not the only currency in the EU, which ensures countries outside the eurozone are not disadvantaged. And the UK also does not want to be forced to contribute to eurozone bailouts, and it has been a big contributor during the last crisis. All right. And last but not least is the issue of sovereignty. The UK wishes to give greater powers to national parliaments to block EU legislation and in an attempt to retain its national sovereignty. All right, so those are the main reasons why the UK is considering this. Now, here are the potential impacts. Okay, firstly, it's trade. The UK's biggest trading partner is the EU. Over 50% of its trade happens with the EU. Leaving it could leave the UK in what we would call a catch-22 situation. They may not be able to enjoy favorable trade terms that they do currently with their trading partners in the EU bloc. All right, and on the flip side, if they were to leave, the proponents of Brexit argue that actually they will be able to pursue much more better trade terms with other nations outside the EU. All right, so that's the kind of the flip side of the argument. Now, one big point is labor mobility. UK, the entire United Kingdom, especially London, has been a major beneficiary of free labor mobility across the EU. This has attracted an international skill set into the economy and helped productivity. Leaving the EU could have the opposite effect. To give you some numbers, and these are some pretty interesting stats, in 1972, that was the last year that the UK was alone. 1973, the accession happened and they came into the European Union. The UK economy was around $190 billion in gross domestic product back then. All right, so that's in 1972, 1973. You fast forward 40, 45 years or so, and the gross domestic product is touching close to 3 trillion. All right. All of this, we're not saying this has happened because of the European Union. Of course, the country would have grown without the European Union, but it's worth noting that all the economic and social policy, everything, they are so intricately linked with European Union progress. That the UK, the modern UK, and the big portion of its GDP has grown under its alliances with the European Union. And leaving right now is what scares many people, right? Because the UK doesn't know anything else apart from that, especially during its meteoric rise as a global economic power. And again, I want to highlight the numbers: 190 billion in gross domestic product in 1973 to 2.9 trillion, and this is on a adjusted for purchasing power basis, right? Then there's the foreign direct investment issue. So, according to the London School of Economics, leaving the EU and securing favorable free trade agreements with EU member states would only hit the UK by 2 to 3% GDP, annual GDP, which is still a hit. It would certainly put the UK into some degree of a recession. However, if they are not capable of securing desirable trade terms, right, and this is a big risk here, the UK could suffer a hit of close to 6.3 to 9.5% of its GDP, making it a very risky gamble. The EU itself would face a hit on their GDP as well, but of course it would be more spread out, and it would happen over a 10-year period. And one thing to note is in the event the UK does decide to leave, the unraveling of the multitude of contracts across the various 65 or 70 industries, how many ever there are, would take up to 10 years. Okay? So that's the kind of the nutshell, right? So far it looks like, according to forecasts, that it would be a net negative impact, at least in the short run, both for the economy and then it will show later also for the British pound. But now let's get into the depth, the actual meat. All right. So we'll start with consumer affairs. These are, by the way, all the debate points by both the proponents of the Brexit and those that are against it, those that want the status quo, they want the UK to remain. First, we'll talk about consumer affairs. So those that are wanting to leave, that are in favor of the Brexit, are basically saying that the EU fosters a red tapeism environment, so to put it, right? It makes, as a result, goods and services just a bit more expensive because there's more administrative costs going into being part of the EU. Those that would oppose that say that, well, the average Briton that's earning here as a result of having gainful employment is saving an average of almost 600 to 700 US dollars a year, right, of 450 British pounds, because prices of products and services are lower as a result of being in the EU. Right, and that's just a mathematical fact. The next point that proponents of Brexit make is the so-called tampon tax, right? It's just a colloquialism, but they're saying that the EU has too much power and the Britain should be able to set value-added tax, VAT rates itself. And those that remain, those that want the status quo, that want the UK to remain, argue that, well, actually, if you take a look at flight costs, the cost of traveling within Europe, and also mobile phone charges, amongst other major goods and services, they're actually cheaper as a result of being in the EU. All right. And those that are wanting to leave say that consumer protection laws, right, that protect the consumer from being extorted price-wise, have been in place in the UK even before it was in the EU, so well before 1973, and they would remain in place after they leave. But those that argue in favor of the status quo, in favor of staying, are saying the EU actually ensures that imported goods meet European quality standards. So the overall quality of goods, right, protect the consumer on a European level. Basically what they're saying is that the European quality benchmark, whether it's for food or plastic products or any sort of consumer durables, is as a result higher. There's just a higher kind of benchmark. So that's the argument in favor of leaving. The next major point of debate is the actual cost of membership, right, of being in the European Union. One thing to note is that the United Kingdom is a net contributor to the EU budget. So those that are in favor of it leaving are saying that the gross cost to the entire United Kingdom of being in the European Union is around £4 billion a year, right? So around $7 billion a year, or roughly speaking, around 500 to 600 million dollars a week, right? That's the run rate. That's the cash burn rate to the UK economy for being part of the European Union. Those that are in favor actually say, well, the economic benefits of EU membership easily outweigh the cost. So if the UK left, billions of pounds would become available for other priorities, right? That's what the proponents of the Brexit are arguing. But those that are saying to stay are actually saying, well, the benefits are uh, maybe intangible, but they're much higher. Other countries contribute per person more than the UK does, and they are staying. Okay. Now, those that are wanting to leave say that the UK would be able to decide how to spend the money that the EU transfers back to it. Right now, the EU decides how that contribution is spent. Um, those that are saying in favor are saying after the Brexit, the UK would still have to contribute to the EU budget to retain access to a single market. And this is a very important point, right? Even if the UK leaves the European Union project, in order to have the same favorable trade terms with its trading partners in the European Union, remember that's almost over 50% of UK's trade happens with EU partners, they still need to contribute to the EU budget. So they'll still need to pay, right? So it's not like they're going to be absolving themselves of the need to pay. The next point is education and research. So the main views of those that are saying, look, let's leave the European Union are three key points. Firstly, they're saying only 3% of total research and development spending in Britain across all the sectors is funded by the EU. Okay. But it's worth noting that UK universities receive millions in research funding from the EU. All right. The UK will be able to increase funding to science out of savings from not paying the EU membership. So this goes back to the previous argument. But what the proponents of those that want to stay, they basically say that many of UK's top scientists come from elsewhere in Europe with the help of EU grants, and the EU grant scheme is pretty big, right? Now, with regards to its immigration policy on this front, on the education side, Britain could set its own immigration policy, which could fast track scientists and graduates. That's what their retort is, even if they were not part of the EU. But then the proponents of staying in the EU argue that the Erasmus program allows British students to actually study abroad. And there are a lot of British students that wish to study abroad, not just in the UK, right? And that would obviously, they may lose access to that. The next point is energy and environment. So, as you know, the EU over the last decade or so is in the process of developing an integrated energy market. There are a range of EU-wide policies that tackle climate change and carbon emissions trading, and it's a unified carbon emissions trading scheme. And of course, there's also legislature on water quality and air pollution. Now, those that want to leave are basically saying that EU environmental regulation is an unnecessary financial burden on the UK, and it pushes up energy prices, right? But here's the interesting thing. The think tanks in the UK have calculated that leaving the European Union would see energy bills rise by 500 million pounds, close to $800 million. It would actually increase energy bills to the person who's paying energy costs and energy prices here in the UK every month. Now, other European countries would still want to sell their electricity to the UK after the Brexit. That's what the Brexit proponents argue. But the EU proponents, or the proponents of a common EU with the UK in it, they argue that energy security is stronger as part of the EU, or being part of the EU, because it negotiates as a bloc. That's one thing to note, is that if you're part of the EU, the European Union negotiates trade terms for all its countries as a single party, as opposed to individual members having to do that. And that includes energy policy. So the proponents of staying are basically saying that you're actually getting better energy prices as a result of being in there. A big argument that the proponents have, however, to combat this previous argument is, well, actually, the bulk of UK's gas imports, remember, UK is an energy importer, come from Norway, which is a major energy exporter and producer. So Britain is not necessarily dependent on Russia, which supplies a good portion of Europe's energy needs. Those that would argue against that say that, well, the UK has cleaner water and air and lower greenhouse gas emissions thanks to EU action over the last kind of 20 years or so, right? Okay. Now we can talk a little bit about defense and foreign policy. Now, proponents of a Brexit say that the membership of NATO and the UN Security Council are more important to Britain's defense than being in the EU. And those in favor of a common uh, bloc with UK in it say that the UK needs to be in the EU, helping to take big decisions, not sitting on the sidelines. Those that argue in favor of a Brexit say that the EU interferes with defense procurement and wants to set up its own army, right? Not the NATO army, but its own army. And those that those that are in the UK that want to be part of the Europe and want to maintain the status quo are basically saying that leaving the EU would diminish Britain's influence on the world stage. However, the Brexit proponents counter-argue that Britain would have more influence on the world stage as an independent country. However, again, there's a counter-argument to that, stating that working with EU neighbors to tackle shared threats has helped keep Britain safer, right? So the number of terrorist attacks or all those other incidences have been kept to a minimum as a result of working with Interpol, the common security agencies and other factors like that. Now let's discuss immigration, which is obviously the top main reason behind all this Brexit fervor. So here are some numbers, and these are quite interesting. So you can take these down for those of you that are quite interested in this issue. The total net immigration into the UK or migration into the UK is running at around 300,000 people per year. And this is despite the government having put the limit at below 100,000. All right, so 300,000 people are coming into the UK, and that's a net number. And the thing is that EU citizens, as you know, have the right to live and work in any member state, right? Total free labor and habiting mobility. Now, those that want the UK to leave say that it is impossible to control immigration as a member of the EU. And the numbers prove that, right? We have to give them that. They are running almost 3 times over budget. However, the key thing to note, and this is the proponents of the EU, say that immigrants, especially those from the EU, pay more in taxes than they take out, right? And that's a fact. I can attest to that. Those that are in favor of leaving say public services are under strain, like the NHS, right, which is the National Healthcare System, because of the number of migrants. However, those that favor the status quo say that David Cameron's recent EU deal means in-work benefits for new EU migrant workers will be limited for the first 4 years. Right? This was signed recently, so that's a good thing, which would put less strain on the public health service system and the public system in general here. Now, here's a big quip that a lot of the pro-Brexit people have here in the UK, and this is that high immigration or over-immigration has driven down wages for UK nationals, for British nationals, British workers. The counter-argument to this is outside the EU, let's say the UK left, the UK would still have to accept free movement to gain full access to the single market, right? So this goes back to the point that you can leave the EU, right? And that may seem hunky-dory for a bit, but ultimately, if you want to trade with the EU, if you want to trade with the EU on favorable terms, then you have to allow free labor mobility, which means you'll still have to continue to accept immigrants, right? EU migration. So it's almost a moot point. If you leave, you're going to take a hit either way. Yeah, you'll get more British people their jobs back if you feel that their jobs were taken. But the wider problem here is that you would lose access to the single market. And that's a big trading partner, right? And then there's a points-based system for migrants to the UK, and this should be extended to include those from the EU, right? In general, the main counter-argument is that net immigration is good for the economy. Now we can discuss policy and security. So we've obviously entered a period of global tumult, increasing spate of attacks, terrorist attacks across the globe. And the terrorist attacks in Paris and Brussels most recently have brought security up to the center of the debate, so to put it, next to immigration, and both are kind of linked. Thing to note is that the UK currently is not part of the Schengen borderless travel area, but EU citizens do have the right to move freely in and out of the UK, right? And those that want the UK to leave EU are basically saying that being in the EU, because of this free labor mobility and the free movement of tourists, makes the UK a bigger terrorist attack point, right? It makes it easier for terrorists to come into the UK, and that's a fair point. It does, right? Its border control is more lax as a result of being the EU, so that's a fair point. Now, one thing to note is Britain does not have open borders because it is not in the Schengen area. Okay. Uh, the proponents of Brexit would say the supremacy of EU courts makes it harder to deport violent criminals. But those in favor of staying argue that the Europol membership allows the UK to share intelligence. That's an important point with the Interpol and other security agencies and fight cross-border crime. Right, so the MI6 can work with Interpol and other agencies and have access to databases and intelligence and thwart terrorist attempts. Those that are leaving, those that are in favor of leaving, are saying that Britain would still cooperate with other European countries to fight terrorism after Brexit. Leaving the economic zone does not really have to impact the security policy. And I tend to agree on that one, actually, right? I don't see how the two are necessarily linked. Having lower threat levels across the world should not be something that is the luxury of those that are part of a common trade bloc, right? It should be the right to freedom and the ability to walk the streets should be something that is afforded on all nations. And if that means sharing information, sharing military intelligence, counterterrorism intelligence, then that shouldn't be something that is kept away from the UK just because they decide to leave. So I think that in that point, those in favor of the Brexit do have a good point. Let's discuss sovereignty. So this is kind of agenda item number 2 after immigration. As you know, those living in the UK would have at some point faced the burden of living under laws that have not been made in the UK but actually in Brussels as a result of being part of the EU. But if you actually examine the number, a very small fraction of those laws, of UK laws, actually derive from the EU, right? It's a very small portion. Not enough to say that, hey, if we leave the EU, we're going to make our own laws and those laws are better. Now, one key sticking point for Brexit proponents is that other member states can force through decisions against the UK wishes, right? So that kind of impedes on national sovereignty. However, the EU proponents argue that Britain, being such a major economic power in the EU, actually retains a veto in many important areas, right? But those in favor of Brexit actually counter-argue, saying that the British government has repeatedly been defeated in cases brought to the ECJ, which is the European Court of Justice, right? But then Cameron has been successful in signing a recent deal that allows national parliaments to block legislation. So that's already gone through. And the Brexit proponents, as a final counter-argument here, say that, well, leaving the EU overall is the only way to regain full sovereignty, which is what the UK had in 1972 and years before, right? However, the EU proponents go back to the fair trade argument and saying that, look, if you leave, you're going to lose access to the single market, right? Unless you pay. And some sharing of sovereignty is crucial to enable fair trade across Europe. And I do agree there, right? If the UK just went and made their own secular laws, it would just make it an ineffective trading partner potentially for other European nations. So some degree of sharing of sovereignty is crucial. So on this point, I think there is a point to those who want to stay. And then we have 3 more to go through: trade and economy, travel, and work and pay. So let's discuss the trade and economy. So as I mentioned earlier, about half of UK's overseas trade is conducted with the EU, right? Although the UK is a net importer, so it buys more from the EU than it actually exports, right? The EU single market allows free movement of goods, services, and capital, and of course, labor mobility, i.e., workers, right? This is an important point. Trade negotiations, as I mentioned earlier in this presentation, are actually conducted by the EU on behalf of the UK, right? The UK doesn't do it separately. So the EU as a group has much higher negotiating power than just one single country inside it. The main views of those wanting to leave the UK are as follows. They're saying the UK companies will be freed from the burden of EU regulation. However, as the BOE, the Bank of England, right, which is the central bank here, just like the Federal Reserve in the US, has openly come out and said that Brexit would actually cause an economic shock and growth would be slower. The London School of Economics actually supports that. They've done a significant research project showing that the UK could actually take a hit from anywhere from 2 to 3% all the way up to 10% of their GDP, right? Which would send the country into a significant recession. Maybe not a depression, but certainly a recession. Now, those wanting to leave the UK say that, well, 50% of our trade is with the EU, and that trade would continue because we import more from them than we export, which is a fact. However, as a share of exports, Britain is more dependent on the rest of EU than they are on us. And this whole concept of turbocharging that is put forward by Brexit proponents is that Britain would be able to negotiate its own trade terms, especially with powerful trading partners like the US and other Asian nations, without the red tapeism that is associated with allowing the EU to negotiate on their behalf. But again, the EU retorts and says, or those that are in favor of staying say that, well, the UK would still have to apply EU rules to retain access to the single market. So not much would change, right? You can't eat the cake and have it too. You'd still need to comply. You still need to apply EU rules if you want to have access to the European single market. So if you gain US as a trading partner on your own terms, you're going to lose the US. You're going to lose Europe, is what they're saying. And then we have travel. So over 1 million Britons live in other EU countries, and millions more are visiting each year, right? There's a lot of outflow. There's a lot of tourism away from UK into European nations. The membership of the EU allows citizens to live and work where they live, which actually, I can speak from personal experience, is an excellent thing, right? The EU also makes rules which affect tourists traveling around Europe. Now, those that want to leave say that there is no reason that leaving the EU would make it harder to go on holiday in Europe. However, those that want to stay say that flights to Europe and using mobile phones on holiday are cheaper thanks to the EU, which is a fact, right? You have the whole roaming tariffs and you have all the special data packages that are created by mobile phone operators and networks. And that's because the EU is in place. Now, international law means that current expats, this means that Britons that are living outside of the UK, could not be forced to return back to the UK, right? If the UK were to vote in favor of a Brexit next week, you can't force Brits that are living abroad to return back to the UK. Now, the counter argument is that's true, but British tourists enjoy freer or cheaper healthcare in other EU countries as a result of being part of the EU, and that would rise if they weren't. The proponents of the Brexit have another argument saying that the UK has to deal with lots of other countries to help Britons living abroad. However, the EU has said that there is no guarantee that expats in the EU would be able to stay after the Brexit. And this is actually quite sinister, if you ask me, right? So they're actually saying that if you leave, there is no guarantee that your people here in other European nations would be still allowed to stay there, right? And that's actually quite aggressive. And there is no guarantee, right? The EU hasn't explicitly said that, but if you're going to stop migration into the economy, if you're going to thwart or halt labor mobility, you're going to disallow, for example, German citizens to work in UK or French citizens, then you probably are going to be facing a very hostile reception being a Brit in those countries, right? And that's what the proponents say, those that want the UK to remain in the EU, right? Now let's discuss work and pay. So unemployment rates are over 10% on average in the EU because the EU is still suffering from reeling from the impacts. Although now there's a bit of a recovery, it's still reeling from the events of the last decade, the crisis. Um, and unemployment in the UK is just 5 or 6%, right? Some workers' rights are guaranteed by EU laws, but tax rates, benefits, and the minimum wage are down to UK government decisions, right? Now, the proponents of the Brexit say that less regulation in the workplace would also create more jobs, right? So they're referring to EU laws. However, the proponents of the common group of staying in the EU are saying that 3 million jobs in the UK are linked to trade with the EU. 3 million jobs, right? That's a huge portion. It's a significant portion of the EU workforce, of the UK workforce. Those that want to leave say that maternity leave and holiday pay would only change if Britain decided to change them. However, the proponents of the EU say that the EU has delivered guaranteed holiday pay, paid maternity leave, and increased protection in the workplace. Right? Those are the positive things that have come out of being part of the EU. They argue that the UK could get more investment from countries outside the EU were they to leave. But it's worth noting that the UK gets close to $100 million every day, right? Every single day, $100 million, 66 million pounds, is coming from the EU as foreign direct investment. So these are the main issues that they're debating. All right, so that was pretty exhaustive. I'm sure some of you were taking notes. Maybe some of you fell asleep. The most important thing to note is that there are quite a few issues, but a lot of them are centering around sovereignty and immigration, right? But what is becoming pretty clear is that we had a major crisis around 8 to 9 years ago, the effects of which are still felt around the world, especially in Europe. Right? America has printed its way out of the problem. It's massively devalued the dollar by doing years of quantitative easing, the negative impacts of which maybe we will see in a few years. But for now, they certainly have managed to escape the recession, and you can see good job growth. And Yellen, although she did say we're not going to look at another rate increase by July, but it does look like there's a rate tightening cycle in place there. So while the US is doing okay-ish, good to okay-ish, the European economy is still beleaguered. And make no mistake, if the Brexit happens, the risks are to the downside, right? The risks are to the downside, both on the currency front, and now we'll discuss this, and more importantly, overall on the economic growth front, right? Any country, any economy that is teetering on the brink of recession can be pushed into recession. It's a trading partner with the UK, and the UK certainly could face recession as a result. I see a few questions already coming in. I'll answer them towards the end. So what impact would this happen? I mean, again, what impact would this have on the FX majors? Now, this starts to become more relevant for traders here. So the euro is considered a risk-on asset, generally. And in the event the public referendum next week shows a strong vote in favor of a departure, and right now it looks like the vote is in favor of a departure, this could result in a sell-off, right? And net, the EU would stand to lose out if the UK left, right? Both parties benefit, according to economic projections, with being part of each other as opposed to going at it alone. Now, the USD is a risk-on asset. That means when investors are feeling more bullish, they tend to buy the dollar. But it's also a haven asset in other environments. When there is systemic risk in other countries, then people tend to buy the US dollar as a measure of safety to some degree, right? Not as much as gold, or not as much as a Swiss franc, but to some degree. The link between the potential departure of the dollar, a potential departure of the UK and the dollar remains unclear at this stage, but there is going to be heavy volatility if it happens, right? Because the dollar, the reason people are buying the dollar is because of the rate tightening cycle in the US this year, right? That's a big reason people are buying the dollar, because they're expecting US rates to normalize. It is difficult to foresee an environment how the US Federal Reserve can conduct an interest rate hike cycle free of problems if the UK decides to leave, because it would just put the global financial markets in a state of DEFCON 1, right? In a state of heightened alertness, and people will be very wary to invest in markets, and that's not good for any country, and certainly not good for its currency. So it's unclear what this impact will be on the dollar, but net net we would say would be negative, right? With regards to the Japanese yen, now the Japanese yen is an unequivocal haven asset. This means it's a risk-off asset. When there's bad news, people tend to buy it. Now, the UK leaving EU is bad news economically, at first at least, and hence we think the JPY may experience strength along with other haven assets such as the Swiss franc. The Swiss franc is a go-to asset when investors are nervous. Okay. And then last but not least, the most obvious read across asset here would be the British pound. UK leaving would obviously hit it significantly, right? And what do you do as a trader? So right now we have basically today, tomorrow, and then a few days of next week. You're going to have very difficult conditions anyway. Those of you that are trading may have already suffered a bit of losses, or those of you that have done well, well done. But generally speaking, you have very heightened volatility levels. You have a lot of concern in the market, a lot of confusion as well at this moment. And the market conditions are probably going to worsen over the next few weeks. So the best thing to do is to actually sit on the sidelines, get out your virtual accounts and trade. Or for those of you that are a bit more experienced, then you can trade the news, right? You can say, okay, on the 23rd of the June or a day before the event, you may get heavy volatility surrounding the public referendum. But depending on the outcome, and you have to watch the polls, right? Just go to Financial Times. There's a live poll tracker there. If the UK decides to leave, you may have what is known in the markets, in the financial markets, as a near Six Sigma event, right? And this basically means a very, very large move in certain currencies, specifically the British pound versus the US dollar, known as cable. You could see a drop of anywhere from 200 to 500 pips, even more, right? It could be a very, very significant move, similar to the move we saw last year in January when the Swiss National Bank decided to remove the floor they had with the euro, right? And this will impact the other currencies that we went over as well for the reasons I mentioned, right? So you can actively trade that. Of course, not something we would suggest. It's a very risky activity. But generally speaking, if next week the vote is in favor of remaining, then you'll have an opposite effect because the British pound has lost value going into this news because people are discounting increasingly that there will be a Brexit. However, if there isn't, then you'll get a big spike up, right? So potentially these events are tradable depending on the margin requirements that your broker is going to be setting. But from our personal perspective, it's always better to be safe and let this kind of play out, let the waters calm down a bit. Now, in terms of, in a post-Brexit world, if the referendum does vote in favor of an exit, the actual government referendum doesn't happen until 2017, so next year roughly, which means uncertainty will still exist, causing volatility patterns in British pound related crosses, right? Currency crosses. And that's it. Okay. So that was pretty heavy in terms of information in that webinar, but I will take your questions now if you have any. And if I miss anything, feel free to email webinars@hotforex.com. All right. So I see a question here now from Salman Ali. Is Brexit really going to happen? So Salman, this is an interesting question. If you look at the polls, then at this moment, where we are at 16th of June, right? So we're literally 7 days away from the referendum, from the vote. It looks like it's going to happen, which is bad news for currency. It's bad news for the economic market, at least in the short run, right? It's bad news for stock markets, and it opens up a can of worms, right? A range of known unknowns in the market. So according to the polls, yes. However, it's worth noting that there is 9% of the pollsters are undecided. And when you get events like today, where the Bank of England comes out and says, do you want an economic shock? Do you want to put the UK into recession? Then vote Brexit. These 9% that are undecided are most likely to read this and say, okay, well, no, we don't want that, right? And so that could massively swing it back in favor a of a status quo. So in answer to your question, it looks like it's going to happen based on the polls, okay? But the polls are not based on polling a million people. They're based on polling a potentially cross-sectionally representative sample size or sample set of people that represent the entire UK public, but it's only a few thousand people, right? So you can take that with a bit of a grain of salt. Our personal view on this, and this is the blue sky binary view, right? This is not the hot forex view. Just I want to state that out for legal reasons. Our personal view, and this is not investment advice, is that we don't believe the Brexit is going to happen. So we're actually going against the polls, right? Um, we have a range of reasons why we believe it's not going to happen, but that's a subject of another webinar. What you need to know is that whether it happens or not, we're going to do another webinar to discuss next steps, because that will change the fabric of trading, at least for the next few months. And it's important that you attend that webinar and you understand how that will impact your trading. Okay, with regards to a question I have from Charan Kumar, what is the effect of Brexit on gold? Excellent question. So gold is like the Swiss franc. It's a haven asset. It's an asset that people buy when they get nervous, right? It's a store of value that's not fiat, right? It's not like the US dollar, which is based on kind of like nothing. It's not really backed by assets like with any other currency. So gold, however, it's asset backed in the sense that it's actually physical commodity and there is a limited supply around the world. And so investors tend to buy it, both institutional, financial investors, um, short-term and long-term investors, when there's negative news. Now, if you look at gold, I was looking at the chart this morning. It's shot up, right? It's risen going into this, and it may actually continue to rise, because as we reach that that day next week, investors are not going to be getting in big into high risk stocks or high risk currencies. They're going to seek safe haven. So gold, in answer to your question, if the Brexit happens, is probably going to experience more strength. Okay. Okay. Any further questions from anybody on Brexit or any of the topics we discussed? Feel free to ask now. Okay, a good question from Saman. What is the impact on Japanese yen? So the impact on Japanese yen is less clear than it would be on gold, because gold is a safe haven asset. With the Japanese economy, you have to obviously factor in their growth prospects as well. So you would need to look at the latest BOJ policy um, and see where that is headed in terms of their growth and their interest rate levels. But suffice to say that it is also a haven asset, like I said earlier, so it would experience strength because the Japanese economy is seen, generally speaking, as an ex-growth economy, right? And I don't mean to insult any Japanese people on the webinar here. It just means that it's not able to grow nearly as quickly as some of the more emerging markets or even the US, because Japan has gone kind of ex-growth. They have reached technological maturity to a certain degree already many years ago, resource maturity, and therefore they've struggled to really grow. So in that sense, um, to a certain degree, they're like Switzerland in that they have a very stable economic system. They have a certain amount of GDP every year, and their currency is a very reliable, stable source of value. So investors tend to buy the Japanese yen when there's bad news, right, over the dollar. So, in answer to your question, if there is a Brexit, and we personally hope there isn't, by the way, you probably saw that on my sentiment, through my sentiment over the course of the webinar, then you will probably get some Japanese strength as well. So Japanese yen potentially rising on the back of that if it happens. Gold potentially rising on the back of that. Swiss franc certainly potentially rising on the back of that. And then the others like British pound, US dollar, euro probably to take net negative hits, right? And the British pound certainly, but the others as well. Okay. I see a question from August Holes. Thank you, August, for the kind feedback. A mountain of information. Yes, August makes a great point here. He's saying this is certainly a very trying time, and trading is better left to the experienced traders. And I would agree. I would actually agree. The thing is, if you want to take a barometer, the experienced traders, right? Those that are literally down the street here in the city of London, the hedge fund traders, they aren't trading. They have gone long cash, right? If you looked at what has happened to the longer term bonds, which are considered safe instruments, long term UK government gilts or German bunds, right? Or US 10-year treasuries, you'll see that they've actually risen. The yields have dropped, right? Because a lot of cash, which was sitting on the sidelines, is saying, we don't know what's going to happen. Even these experienced traders don't know what's going to happen. These investors, they've put money in interest bearing bonds, right? Long term bonds, which offer the security of the underlying long term outlook of an economy. So they aren't investing, right? They aren't saying, oh, I'm going to put this much money in gold, we're going to put this much money in. So they're actually sitting on the sidelines. And that's what a smart trader would do in this respect, right? Now, for those of you that have small micro accounts, right, you literally have money to throw, right? Let's say you have a few $100s or something where you're not impacted at all. Then this is a valuable learning lesson, right? You can trade the Brexit and see what happens. But I will tell you this, chances are you're going to get wiped out, right? So just be very careful. The market is going to be here after Brexit. The market is going to be here for the next 10, 20, 30 years probably, right? So uh, this is basically another non-farm perils, but amplified by 10 times, right? What's happening next week. So just be extremely, extremely careful if you're serious about your long-term career. Thank you, Salman, for the feedback. Yeah, so this was obviously a different type of webinar. We really went into the depth, but it's because we want to get a message out there. There's a lot of confusion with regards to what are the moving parts of the Brexit, and I think the situation is going to get even more confusing and muddled in the FX community. So we wanted to simplify some of it. And of course, there's another webinar. There's a two-part series that we're doing with HotForex, which is after the Brexit. We're going to crunch the numbers. We're going to do our research and come back with suggestions. What to do if this does actually go through. Okay, I see a question from Robert Cadeau. How will you handle things in the hive? That's obviously a very interesting question, Robert, referring to Signal Hive. So I think with reference to any kind of signals marketplace or anything like that, we're putting everything, the, the auto trading operations are coming to a halt, right? So for those of you that are on auto traders or those of you that have PAMs or anything like that inside the Hive, the automatic replication of trades is being halted just because we want to be very risk averse. But those that are very experienced traders that still trade through environments like this, we want to allow them to trade, right? So again, if you have the hat of experience, then you deserve to trade this environment with reduced risk, though, right? I mean, that's a big caveat. But if you are allowing your account to be traded by robots, which are very susceptible to volatility, next week is the perfect storm. There's a big Six Sigma event potentially coming up, so the best thing to do is to switch them off. Sure, Saman. Okay, I see a question from Nav M. Yes, Nav, this webinar is recorded. Okay, excellent question from Mohammed Emil. Is there any effect to the Asian market, such as Japan and Australia market? So hypothetically, the Japanese yen would experience strength in the event Brexit happens. And as a result, hypothetically, there would be if there are investors who believe that, okay, now suddenly the kind of X growth equities in Japan are safer havens. Maybe they offer dividend yield or whatever. You may see a bit of cash which is on the sidelines, which has not been invested into European or US equities. Maybe it goes into Japanese equities, right? But this is a very, very blurry read across, right? It's too early for us to make such a statement. Um, you know, to put this in the kind of larger scale of things, this isn't 1929. A Brexit is not 1929. A Brexit is not the Lehman Brothers crisis. It's nowhere. It's not that big. But a Brexit is a significant hit to a ongoing European recovery, right? And and that itself can retard to a certain degree or slow down the the rate hike plan in the US and other normalization plans that are happening around the world as all the economies have recovered or are in the process of recovering, right? So yes, in Japan you may experience some strength. Again, this remains to be seen if this happens. The Australian market, in answer to the second part of your question, how does it impact the Australian market? That's more dependent on energy prices, right? The mining sector. Um, and so I would defer you to market specialists that specialize in the Australian equity market or the Australian fixed income market, right? That's outside our expertise, so to put it. But again, I would say given that the Australian economy is not too tied to the British economy per se, although both 5% of the UK economy is energy dependent, Australian economy is close to 13, 14%, with 8% being mining. I would say that the link is less, so the Australian market should be unaffected. I don't know if it's going to go up or down. That's my answer. And there's kind of one thing that I didn't mention here, but it's important that I do, is the unravel risk, right? Investors are going to be facing a nightmare if Brexit happens next week, right? In terms of what to do with their cash, because they have a mandate. Investors are running piles of cash every year. They have to invest in interest bearing assets or yielding assets, and those assets that have capital appreciation opportunity so that they can beat the market and return money back to their primary shareholders, right? That's how hedge funds work. That's how the entire institutional investing sector works. When you say the markets, that's what you're referring to. Now, the problem is if Brexit happens, you have all these range of variables and unknowns that need to be computed and all this portfolio recalibration that needs to happen. But on top of that, you have Grexit risk. Because if the Greeks look at this and they say, oh, well, if the UK can leave, why can't we? Why do we need to honor our debts? Then, if you remember 2, 3 years ago, the tailspin that the Grexit risk and the Greek referendum put the euro in, if you remember that, that will come back on the table, right? And if Grexit starts to happen, and Brexit is already happening, then Portugal and Italy, I'm not saying that's going to happen, but people will start to look at the peripheral economies and say, well, what if those nations start to look at this and see a complete unraveling of the Eurozone? And it's this reason, this unravel, the great unravel, as we call it here in Blue Sky Binary, is why we believe that there will be an 11th hour solution. And I don't think the Brexit will go through. And we're really putting our necks out here on this, right? We're not giving any investment advice, just to be very clear. But we internally are putting our necks out and saying that we don't believe the situation is going to get that bad, right? Because once the Brexit happens, it sets such a big signal to the other European economies, the beleaguered economies, that we don't need to pay back our debt, maybe, right? Maybe being part of the EU is not that great. And that's the last thing Germany would want. It's the last thing the more well-to-do nations of the European project would want. And and then I can tell you, if that happens, then the U.S. has a major problem, right? Um, the U.S. tech sector alone is not going to keep the U.S. buoyant and unlinked and decoupled from all the contagion and the problems that's happening on this side of the world, right? The Chinese economy will take a hit. Then you're just going to get a domino effect, right? If Europe unravels, this will be as big or even bigger than what we saw in 2008, right? And the Brexit makes this probable or at least possible, and that's what scares investors. I see a question from Van Nugen. If Brexit doesn't happen, will GBP be strong? Probably yes. Okay, good question from Robert Cadu. What would be the impact on oil prices? So this is a complex question, one I'm not sure I can give a coherent answer to. So net oil prices have backed off. They were in a recovery mode. Technical analysis, saw them going above 50, and I think they briefly went over that. If I'm not wrong, I need to double check that. But now they've backed down a bit. The UK is a significant producer of oil. A lot of the FTSE 100 companies are oil geared, like BP and those. And net, the UK leaving would have a slightly negative impact on oil prices. But I would say again, it's I'm not an oils analyst, but I would say that a lot of this is probably priced in, and global oil markets are. If the Brexit leaves the European Union, yeah, there's an impact on trade. There's a real economic impact, but I think it's just too decentralized, the entire market, global oils market, to really take such a big hit, right? Um, so it's difficult for me to say. I mean, I don't think it'll be up. Certainly, I don't think oil prices will rise if Brexit leaves. If anything, it might be some weakness. But again, I don't think it's enough to kind of bring them back to whatever marginal cost used to be before 2003, right? So $15 or $10 a barrel. I don't think that'll be the event that brings it back down. Any questions from anybody? Last call for questions. Sure. Final call for questions. Okay, I see a question from Charan Kumar. Can we buy and sell at the same time with SL at strong levels? Charan, I personally wouldn't. I'm not entirely sure what that's supposed to do. I see what you're trying to say. You're trying to hedge the impact either way, and then just participate in the upside, whether it happens or not. It's not a technique we're that familiar with, but you can certainly get in touch with your account manager and ask them if that strategy makes sense. So, a question from Felix Ogona: Those it mean Brexit can affect our stop lose? Yes, if I understand you correctly, Brexit can certainly destroy your stop losses in a second. Yes. Any questions from anyone? Last call for questions. Good. I see no further questions, so I wish you all a safe trading. Wait, I do see a question, sorry. From August Holes. Should the UK vote to leave, the main impact would be at the end of 2017. Would this mean we would experience volatility and lack of direction in the market until then, such as we have had of late? Yes, August. But, however, what the market likes to do is price in probabilities already, right? So in the hypothetical event that next week UK votes to leave, the investors will already, I mean, that's why the pound will plummet, gold will shoot up, Swiss franc will shoot up, Japanese yen will rise. This will happen very quickly. This repricing process may happen over 3 days, 3, 4 days, right? The immediate impact will happen in a few hours, 3, 4 days, and then as hedge funds, institutionals, countries, they recalibrate their holdings of these currencies and other assets, you will get um, a new normal, so to put it, right? So the British pound USD will be at a new level. I don't know what that is, whatever it is, 1.4, 1.3, or whatever it is, until new news hits in such that the market needs to reprice. So what I mean by this is they like to price in the worst, right? Rather than just slowly price in as new information trickles in. So it's not like the British pound USD will be on a structural decline for 1.5 years until the day they leave, right? What's probably going to happen is investors, there's going to be a panic sell. It's already going to drop, and then any news that comes in after that will already be priced in, if that makes sense. So it wouldn't push the British pound US dollar down further and further, right? That's the most important thing to note, right? That's a key thing to take on board, is that investors like to travel rather than arrive, right? So they're going to buy the rumor and actually sell the news, and which means that if the public votes next week to leave, the entire repricing will be such that it's already happened in 2017, right? So that when it actually happens in 2017, there will be no shock to the market. So what we think happens is as follows. In the event the Brexit is voted a yay or a yes next week, the assets will fall accordingly, such that the next 15 months, the risk is actually to the upside for positive surprises, right? Um, and we don't know what those news points are. Maybe that Cameron is successful in negotiating better terms, right? Because if the UK is successful in negotiating better terms with the EU after departure, then the hit to the economy is only 2%, not 10%. And that's those sensitivities will start to kick in then, right? So it'll always be about the contract negotiations and how exactly the UK will leave. But what we have seen, what we saw in, if we go back to the last Six Sigma event, the major Six Sigma event, right? Sort of Lehman Brothers, stock markets fell so hard in that 5 to 6 month period that assets became so cheap, right? If you remember that when things started to recover, late 2009, 2010, 2011, 2012, you saw the biggest rise in equity markets across the globe, especially the US, right? Equity markets rose 40, 50, 60, 70, 80%, ridiculous, because they were oversold. So you may get a similar situation this time. So a question from Robert Cadu, what is the most critical day? Is it the day before, the Brexit day, or the day after? So, Robert, this depends on your risk tolerance. Me personally, for me, this whole month is critical. I would say this next week, starting today, until Monday of the next week, right, is going to be absolute havoc in the markets. And I would say at least for 2 weeks after that, you're going to get some really strange volatility patterns, similar to what you see after FOMC. That strange few hours after that where nothing really seems as it is. And I think that's probably going to continue. So the answer is not, will it be the day before, the day of the Brexit, or the day after? Those 3 days, anyways, is a massive storm. You can't really differentiate which one it is. Obviously, the Brexit day will be where you get the real explosive move. But I would say that you want to build in a buffer, right? So 2 weeks going into it and 2 weeks coming out of it, certainly. And I'm sure you know what we'll be doing in Hive as well. So sure, August. Thank you again for the great feedback. That's great. I'm glad it added value. Siva Kumar, yes, that's correct. That it's all currencies, most currencies will be impacted by this in varying levels of sensitivity, with British pound obviously being the most affected candidate. Any further questions from anyone? Last call for questions. All right. I see no further questions, so I wish you all a good trading day ahead.